Hey folks, H2 reporting back on the F3 channel. Hey, as millionaires and aspiring millionaires, you're probably gonna do a whole lot of work to attain that level. But there are significant risks that exist out there that's got to be covered. And what I'm talking about today is insurance. And so the question on the table is, how much risk are you taking? And some of the ways you can reduce that risk is by transferring that risk. And you transfer risk by using various insurance products. So off the top of my head here, there are four major areas or insurance products you need to consider. The first one is health insurance. As you well know, if you had to go to the doctor or the hospital for something other than a hangnail, it's going to cost a fortune. So you really can't afford to be without health insurance because, one major medical mishap could rob you of all of the wealth that you have accumulated over your lifetime. And so that's not just for you, but it's for everyone in your family. Got to have medical or health coverage of some sort. And so most of us get health insurance from our employers, and that is a great benefit. And by the way, don't discount that in your total benefit package because it's not a one-size-fits-all benefit across the board. So make sure you're watching that. The second insurance product is disability insurance. So you have short-term and long-term disability. And so generally a short-term disability is something up to a year. So if you're out of work for, from, I think it's like from the 91st day to 365th day, that's considered short-term disability. So some of your employers offer this insurance as a part of the package. Other employers make it available for you to purchase. But you certainly want to make sure you are covered at some level with disability insurance. So the long-term disability insurance is that coverage that kicks in on day 366 until I think 62 years old. So, just a fun fact out there, it is more likely that a person will suffer a disability, whether it be short-term or long-term, in their lifetime. And so it's a very important product to consider when we're talking about transferring risk. The next one, the third one, is life insurance. So if something happened to you, you're going to need some sort of insurance to first take care of all of your affairs. Just a funeral is going to cost you somewhere in the neighborhood of $20,000. So at a minimum, you need to have some insurance so that you're not burdening someone else trying to bury you. So in the life insurance category, there are a number of products, more than you can shake a stick at. But unless you're doing some super duper financial moves, all you need is term life insurance. So You can get those at various terms, 5 years, 10 years, 20 years, where the amount is fixed. So in a term life insurance policy, it's significantly lower than most of the other type products because it's just insurance. There is no saving component. There is no investment component. And why would anybody use an insurance product for investments is beyond me. But there are products out there that'll suck you for extra premiums to have that functionality. And then the last one is liability insurance. So if you're in business for yourself, you cannot, in this, in today's age, being sued is a very high possibility. There's people out there to make a living on just suing people. So in order to make sure you're covered or you got that risk taken care of, you purchase yourself a liability insurance policy. So there are two areas that you need to cover. There is the personal liability coverage, and then there's the business liability coverage. And generally, having $1 million policy should fit the bill. So anyway, so those are the 4 insurance types that you need to consider to transfer risk from, attacking your wealth. All right. So there are 3 things that I think you should know in terms of, actions to take right now. And the first one is to do just a regular Google search on various insurance products. Actually, you should first educate yourself on the various type products, see what people are recommending, and look at some of the reviews. So people have no problem telling you about companies that, got poor service or giving you a hassle when it was time to collect. So do a little internet search there and educate yourself on those products and those companies that offer the products that you select. Number 2 is decide on the coverage, on the amount of the insurance coverage based on your risk. All of us don't have the same amount of risk. Therefore, all of us do not need the same amount of coverage. If you have $1 million of something that needs protecting, then buy $1 million policy. If you only, have $50,000 worth of assets that need protecting, then only get $50,000. So my point is, only get what you need, and you can always scale up and scale down as necessary. And then my last point is to sync your insurance coverage with your situation. And that kind of ties into number 2. As things change, as you get married, as you have kids, as kids grow up, move away, insurance levels should be adjusting accordingly. Okay? So there you go, folks. This is how you transfer risk to protect the wealth that you have worked so hard for. Okay? So hopefully that'll help you. H2 signing off. Hopefully you have a great day.